Well, 𝗕𝗏𝘁 is the single greatest launch of all time. It's destroyed any other launch that Blackrock has put out, or anybody. We have a way of measuring this. So what we did is 𝗕𝗏𝘁 has $50 billion, 53 to be on it, to be exact. We looked at, okay, how fast did 𝗕𝗏𝘁 reach a 50 billion? And up before 𝗕𝗏𝘁 did it, what was the fastest ETF to reach 50 billion? So 𝗕𝗏𝘁 did it in 227 days. Previously, the record was held by IEMG, BlackRock's emerging market ETF, that did it in 1,300 days. So think about it. It beat the fastest record by 4.5 years.
Hello and welcome to the Achieving Alpha podcast. My name is Steven and I'm the host of the show. Today, I'm delighted to be joined by Eric Balchunas. He is the Senior ETF Analyst at Bloomberg, and recently he's become a bit of an expert in the Bitcoin ETF and all things ETFs alike. So real pleasure to have you on, Eric. How are you today?
Doing well. Happy Friday. Good to see you.
I heard that you've just come back from Vietnam, right? I saw some of your pictures on X.
Yeah, I just put I like to get trinkets from each place I go. I just bought this tank, which from the gift shop of the Independence Plaza there. I just unwrapped that this morning, but I'm still catching up on, not catching up, but I'm adjusting. It's a really weird thing on your sleep, but I had a great time. But yeah, I'm back in Philadelphia.
Yeah, it's a beautiful country, Vietnam. I've been a few times. Very much enjoyed it. All right. So to get kicked off today, it's a real pleasure to speak to you today. I wanted to kind of a bit more I know you work on a lot of different ETFs and you analyze all ETFs, but I thought today we'd focus a bit more on the Bitcoin ETFs. Obviously, they were improved in January of 2024, so we're not far off a whole year of since they got approval. And I wanted to talk to you more about how do you think the success of the launch went, and how are things been, and were you surprised at any of the success that the ETF brought?
Okay, so we were pretty bullish. Relative to my peers, I remember some people saying, "Oh, there's no demand for these. People can just buy Bitcoin on their own." But I have been around ETFs for many years, and ETFs are really good at decreasing friction, right? You just log on to your brokerage account, you hit a button, and you own it, right? Now compare that to getting your own wallet and all that. It's very easy. This is why the gold ETFs were such a big hit. So we knew they'd be pretty popular, but they've exceeded our expectations. Right now they're at 110 billion. The flows are looks like 37 billion over the first year. Now remember, I'm sorry, let me go back to the flows real quick. 𝗕𝗏𝘁 is 37 billion. The total flows for the group are 35 billion. Well, close enough. But anyway, 35 billion is a lot of money for a new category. It's unprecedented. If our estimate was between 10 and 15 billion in the first year, so it's already more than double the high end of our estimate. And we were pretty bullish. Normally in ETF launches, if it can get like 300 to 500 million in the first year, it's happy. 𝗕𝗏𝘁 has 100 times that. So this is some crazy numbers. Yeah. So not really sure. There's multiple metrics that were destroyed. I don't know if for some reason, I keep going back to like early Tiger Woods. Remember in 96, 97, 98, he would just beat people by 16 strokes. He came on the scene like a house of fire. And this is what this feels like. If I was a sports writer or a golf writer, this is like Tiger Woods, something coming new and just basically taking over the sort of industry by storm. It's got that kind of a feel, like just phenomenal rookie season, so to speak.
Yeah. And yeah, the success of the ETFs have really been quite unprecedented, I suppose, especially when you compare them to more normal generic ETFs that are launched. How would you compare the success of the launch of, for example, the 𝗕𝗏𝘁 ETF compared with other launches that maybe BlackRock and other companies who deal with ETFs usually launch?
Well, 𝗕𝗏𝘁 is the single greatest launch of all time. It's destroyed any other launch that BlackRock has put out, or anybody. We have a way of measuring this. So what we did is IBIT has $50 billion, 53 to be on it, to be exact. We looked at, okay, how fast did IBIT reach a 50 billion? And up before IBIT did it, what was the fastest ETF to reach 50 billion? So IBIT did it in 227 days. Previously, the record was held by IEMG, BlackRock's emerging market ETF, that did it in 1,300 days. So think about it. It beat the fastest record by 4.5 years. So, I mean, I don't really want to over talk that because it's just such a compelling stat. There's multiple things I could throw out there that are like that too. Fastest to 10 billion, fastest to 20 billion. The 50 billion is really just really strong and absurd. And as I said, like if you're a new ETF and you get 1% of what IBIT got, so 500 million, you're happy in the first year. It's a tough industry. The thing that was fascinating is, and I'll give you the exact number right now. When you think about like institutional investors, so these ETFs can be bought by anybody, retail, advisors, institutions, but only institutions have to file what's called a 13F. If they own more than $100 million in equities, they have to tell the SEC what they own. And if you look at IBIT, which is the BlackRock ETF, and you look at how many 13Fs have been filed that say we own IBIT, I'll give you the latest number here. The answer is 730. That is crazy. If you're a new ETF and you have 10 institutional filers reported in the first year, you're happy. So 730 versus 10. Again, it's never happened, 730. And that's just one of the ETFs. If you add the group up, it's well over like 1,200 collectively own the Bitcoin ETFs, including, and this is also interesting, we track on Bloomberg all the different types of institutions. So institution types would be something like bank, hedge fund, insurance company, advisor, pension fund, private equity, holding company, trust, brokerage. There's about 12 different types. Everyone is represented in the holdings. So they kind of like batted for the cycle. That is crazy. Normally it takes years and years. Maybe after year 5, one ETF's liquid enough to get an endowment. But to get every single type of institution reported in the 13Fs in the first year is crazy. So those are just some of the fun facts that illustrate me saying that it's the greatest launch of all time.
Yeah, it's unbelievable, and the amount of inflows that have come in. Do you feel like from the data that you're getting, do you feel that it is new money coming in, or do you feel like it's rotating in from gold and bonds, etc.? What's your kind of feel of the data, and maybe from what you're hearing?
Yeah, I think for the most part, people who were buying the Bitcoin ETF either owned Bitcoin previously or had an interest in it. Because we know this because most of the big advisor wirehouses like Merrill Lynch and Wells Fargo, they aren't until recently allowed to solicit it. So if you're just sitting there and you could care less and your advisor doesn't say anything and you don't say anything, you're not going to own the Bitcoin ETF. So everybody who owns it had to like go to their advisor and say, I want to buy this. Now, the institutions that own it, maybe they were waiting for this because a lot of people don't want to own Bitcoin directly, and some can't. Like an advisor can't custody their own assets, so it would be almost illegal for some of them to own Bitcoin directly too. So I think most of the people that are in it now are likely people who were waiting for the ETF and want Bitcoin exposure. That's a really good sign to be at 110 billion with just the early adopter people. Over time, what's going to happen is the flows and the performance, and especially with the Trump win and the tailwinds regulatory, and there's a crypto czar, and maybe they use it as a reserve asset. This stuff is going to create interest, curiosity, and FOMO for the people who could care less. So I think if we are looking at the first stage, it's the early adopters right now. Some of them probably previously owned it. And I know that even some hardcore Bitcoin people bought the Bitcoin ETF, even though they like having their own wallet, because they might have something like an IRA where they can't buy Bitcoin directly, but they can buy the ETF. So there's going to be all kinds of people. But I guess my point is the first year, I just think it's people who were already interested in it or already owned it another way. Going forward, I think we get more people who were casually interested or not interested at all. What you probably will never get is this pure haters. And there are those people who are just going to always think it's a scam. You'll never reach them. But it's that middle group of people who are casual or just don't care, that over time, the more it comes up and the more catalysts that they see and read about, you might find them coming in too. So that's that's my view of it. But of course, there's no way to totally tell. ETFs are bought anonymously largely, so it's not like I can look in. Even if an advisor like Wells Fargo says they own a little bit of the Bitcoin ETF, I don't know which client owns it, and I don't know why they bought it. So this is just me reading the tea leaves.
Yeah. Did it, when it was approved, did it feel like a real kind of crossing the chasm moment? Because obviously now it's so much more accessible for institutional investors to be able to get involved in Bitcoin. Um, and also, I wanted to ask you as well is if we look at how large the ETFs can actually get. I know that you had an original forecast for the first year, which I think it far surpassed. But how big do you think those ETFs can get in the long run? And is there anything you're benchmarking it against?
Yeah. First question, obviously this was a big moment, and as I present at Bitcoin and crypto conferences now sometimes, and I know the image of TradFi is like boomers and suits and Wall Street, but I try to explain to them that the ETF is a disruptor too. It doesn't make a lot of money for Wall Street. They're very they're cheap. That's why people like them. So the ETF is not exactly something Wall Street loves either. And so the ETF and the Bitcoin is like a marriage of two powerful disruptive forces. And I think that's a good way to look at it. So I did think once you put, I mean, you could probably put like dog poo in an ETF and you'd get some people buying it just because it's that easy. Somebody was telling me that they did an experiment with themselves and they deleted Amazon from their phone and they bought half as much shit. In other words, the convenience and ease actually increases the amount of purchases, right? I think the ETFs are a little like that. They're just so easy and convenient that it make you get a nice, I don't know, it's like a portal and it sucks in a lot of money because it's just so easy. So it was a big moment, bigger than hedge funds buying them, bigger than mutual funds buying them. ETFs are the investment vehicle of the future. Now, your other question was how big they'll get. Okay, so we predict they'll get triple the size of gold. So gold ETFs have about 120 billion. We think they'll get triple the size. What's interesting about the Bitcoin ETFs and why we think they have more potential than gold is that gold ETFs are a store of value. Bitcoin ETFs are a store of value. But the Bitcoin ETFs are very volatile. And that gold ETFs aren't as volatile. And the volatility is a feature, not a bug in the modern world because many people own a boring 60/40 core of a portfolio, cheap Vanguard funds. They just buy and hold, wait 30 years. And so they're a little bored. They have a small allocation on their portfolio for fun stuff, hot sauce, I call it. And Bitcoin really fits that purpose. It is hot sauce. It jumps around. It's very speculative. So to me, a Bitcoin ETF is a twofer. It's a currency debasement hedge, and it's a nice hot sauce speculation. And gold doesn't have that second part. So we think that's why Bitcoin ETFs will probably triple the size of gold ETFs over time because of that extra element that you don't get with gold.
Yes, it definitely does add some more volatility to your portfolio, but I guess that's what people are looking for these days. A lot of people putting gold in their portfolio feels like it doesn't really move much, and it doesn't really change the course of their portfolio that much. Yeah. Okay, and in terms of the rollout of the ETFs, I know that it was a progressive rollout of the ETFs, and that they've just more recently started sending the salespeople out to promote the Bitcoin ETFs. How much is it rolled out now, and do they have all approvals internally at all the different groups that can buy it?
Yeah, it's in process still. It's still early with the more traditional wirehouse advisors. Those are important too. I'm talking about, like I said, Merrill, Wells, UBS, Bank of America is Merrill. I'm missing the third one, Morgan Stanley. These are massive companies. I mean, collectively, I think they might have like 10 trillion in advisory assets between them. So there, it's just beginning. They're very slow to act. The early adopters are going to be the independent advisors, people who are not in those bigger firms, which makes sense, right? Whenever society has something new, it's usually the smaller independent people who go at something quicker. They're more nimble. The bigger places move slower. So I think what we're going to see is over the next year, those big wirehouses will begin to adopt it. And again, some people won't want it, but it will be more normalized, legitimized, and that, and basically accepted. But I've been hearing some feedback that, some of the older people running these advisory shops just, they just don't like it, and this is something that is still going to be an issue regardless of the ETFs, which is you just got, people who just like not into it and they think it's a scam, and they even think maybe their fiduciary duty is to not let people buy it. So I think you're always going to be fighting that headwind, but it's not that big of a headwind. I mean, there's so many other things that are positive. I wouldn't stress over it, but that's probably something that will take a couple of years to break down. The options that were recently added to the Bitcoin ETFs is also huge. Institutions love options. You can sculpt your return profile of the asset better, and you can have fun trading. And so the options are going to bring in the bigger fish too. So those are two big catalysts that just basically started. So I think over the next couple of years, you'll see even the most conservative traditional investors get involved. Now, one thing that's you can't overstate is the importance of some of these big names like Larry Fink and Abigail Johnson of Fidelity. These are very trusted people by advisors. So the air cover that BlackRock has given everybody is just massive. Remember, 2.5 years ago, SBF, Sam Bankman-Fried, he put a nasty stench on Bitcoin. I mean, it had a stench all over it. And within 2.5 years, I think you largely have to give BlackRock a lot of credit for clearing the air of that foul smell and giving legitimacy to it. And that's ultimately what I would focus on is the big shops, trusted brands getting involved. And I always say you need three things for ETFs to take off. The category has to have low fees, liquidity, and brand names. And this category has all three in spades. So just relax, watch the growth, and also just accept that it's 2 steps forward, 1 step back. It's not going to be a straight line. But right now we might even be starting a 1 step back. But we had maybe 4 or 5 steps forward over the past 4 months. So I do think some of the crypto people's expectations gets a little lofty, and that's the recipe for disappointment. If your expectations are like, you want a 100% return every month, you're just, at some point you're just going to be disappointed with things. So I would chill out and just look at the long-term 5-year outlook.
Yeah, I bet you get a lot of people messaging you on X and other such platforms of people saying, "Oh, there was an outflow on the ETF today. We're in trouble."
Oh my God. One of my slides has ARK had like 45 straight days of inflows, one outflow. And the replies on the Twitter page when the outflows were reported were ridiculous. So I put this baby crying. Wah. And I use that in my presentations to be, look how ridiculous you look. I mean, how spoiled are you? It's so stupid. And in my opinion, this is something that would drive anybody crazy looking at intraday charts. You really should just try to keep yourself on like a 5-year rolling chart or a 3-year rolling chart and let that dictate your mood, not the day to day. I would say that to a stock person too.
And how are they holding up, Eric, as well? Like on days where it's particularly bad and maybe Bitcoin's down a few percent or more, do the outflows hold? Do the inflows hold up, or is there a mass exodus of funds?
So this is a great question. There's been a couple nasty, like 1 day and 1 week periods. And in those periods, it was really sticky. I predicted that the boomers would have strong hands, stronger than people thought. So like the one sell off where it was down, I think 27% in a week, it was pretty bad. 3% of the assets left. So 97% of them stuck. I call that a win. Up until 10%, I think you have to say most people are hanging in. So to have 97% or only 3% leave is pretty good. So I think what the reason the ETFs are going to be stickier than people think and better hodlers, so to speak, is that this isn't their core of their portfolio. This is a 1 to 2% allocation. And so this isn't like all the money that matters to them. So they have more intestinal fortitude for volatility because it's not everything. It's not their nest egg. So like, okay, fine, it's down 20%. I went in there expecting if their stock market goes down, that's when you might find more panic in investors because that's their core, right? The other thing is if ETF investors are smart, if you invest in ETFs, you've beat the system. There's so many intermediaries who want to sell you other more expensive stuff. So that if you found the ETF and you're buying the ETF, you're smart because ETFs don't have any distribution fees. You have to find them. So anybody who finds an ETF is a heads up investor who understands behavior. And again, largely we've seen that whether they're a stock ETF investor or gold or whatever, they are pretty sticky. For example, in 2022, stocks were down 18%. Equity ETFs took in $400 billion that year. So these are good investors. These are not degen GameStop investors that are buying ETFs. So I think those two things are why I think the money will be stickier than people think.
Okay. And obviously, there's a lot of different ETF providers. Everybody thinks about BlackRock and Fidelity, but there is also many other ETF providers that launched at the same time. How do you think it goes in the long term? Can you see the very large ones like BlackRock and Fidelity? Can you see them cannibalizing some of the smaller ETFs? Or do you think there's enough of the pie to go around to make sure everybody is profitable?
Yeah, no, I think there's enough to go around. This was another thing people thought. They were like, oh, okay, fine, there's demand, but some are going to close because there's just not enough demand to go around. But I'm going to tell you right now, the least amongst them of the sort of, I call them the 10, I won't count GBTC, but we can also count BTC, which is the mini me of GBTC. But long story short, of all the ones that launched, the one with the least amount of assets is BTCW, right? And that has 376 million, which, as I said, if you have 500 million in your first year, you're a big hit. So even the last one has almost as much as what I would consider a big first year. So there's plenty. Everybody's going to eat here, but some will eat more than others.
Yeah. And obviously, one of the ones that haven't launched an ETF is a Vanguard. I know that you actually wrote a book to do called The Bogle Effect, which was about Jack Bogle and about a bit more about Vanguard. They've obviously been reluctant to go into Bitcoin ETFs. Can you see that stance changing in the future? And is it because of the view on Bitcoin, or is it just that they don't want to put Bitcoin as an asset class in an ETF? I don't think they have gold ETFs either, do they?
No, they don't, but they do allow gold ETFs to trade on their platform. So the fact that they don't let the Bitcoin ETFs is a little bit of a targeted thing. Because I know from writing about Bogle and generally, Bogle wasn't a fan of any commodity. He thought, well, a commodity is just something you're only worth what someone else will pay you for it. Whereas a stock is a company, and the company creates value and is given back to you in the form of dividends. So you get paid even if there's no speculative return. So he lent generally like stocks and bonds better because the money works for you. In Bitcoin or gold or oil futures, a lot of it's just, well, how much will someone pay for it in the future? So for that reason, I can see why Vanguard wasn't into it. But they do allow gold ETFs to trade on their platform. So they basically put out the statement, said, look, we're not really into this. It doesn't have any use case. So it was felt personal to a degree. I don't think they should have done it. Vanguard investors are very smart. Like you said, like I said earlier, they had to find Vanguard. They know how good low cost is. They know whether to invest in Bitcoin or not. Like, give them some credibility here. Vanguard feels like they're playing the nanny a little bit. I think just let they don't have to launch one, but you can let people trade them. So I think right now it's just, they're not into you. And I know it drives some crypto people crazy, but just accept it. However, two positive things that might change it. One, their new CEO, Salim Ramji, is from BlackRock. And he literally was the guy who oversaw IBIT. So clearly he's, into it, or at least sees it, what it can do. Now, the other thing is Vanguard is trying to grow their advisory business. And if you want to be a big time advisor and like manage a rich person's needs, you have to have access to everything. So if the rich person says, hey, I don't want just 60/40, I want private equity, I want this, I want maybe real estate, and crypto, Vanguard may have to get that for them. Otherwise, the client may leave. So those two things are why I think Vanguard may come around a bit. But you have to understand that just their DNA is just really rooted in stocks and bonds, which they would say have intrinsic value, or returns beyond speculation. And I know crypto people may disagree with that, but that's how they feel.
Yeah. And how far are we away from someone like BlackRock putting Bitcoin into the multi-asset ETFs? Obviously, because a lot of people invest passively in those. So I could probably see quite a lot of inflows coming from those multi-asset funds. Can you see that happening?
Yes, BlackRock already put some in one of their mutual funds. Fidelity put some in their Canadian multi-asset model. And I just think over time that the Bitcoin ETF will end up in BlackRock's models, and maybe even some of their target date funds. We'll see. It's just going to take a little bit. Remember, it's not even a year old. It's literally a newborn. Well, no, not newborn. I guess it's an infant. If we're going to go with baby terms, it's not even a toddler yet. Over time, though, I think it'll be more put into these models as it gets broader and bigger acceptance. BlackRock even put a report out recently saying that they recommend 1% to 2% for people. That's a big deal. That's a pretty direct way to put it. They said they got a lot of questions on it, so they came out with that statement because they got so much incoming. Well, if they're saying that that's what you should do, they're probably going to do it at some point. So yeah, I can definitely see models using it. And then there's also just tactical models. Like there's a lot of people who just trade different assets, almost like they're active managers, but they trade asset classes. Well, if you're a momentum based model or a trend following model, you're going to try to own Bitcoin because it's going up a lot. So you may have the tactical models and even the buy and hold models have exposure over the next couple of years. Yeah. Well, you mean options on Bitcoin, like IBIT? Yeah. So IBIT is basically like 95% of all the options volume. Like it came out a day early and it never looked back. But IBIT has a lot of options activity already. It's very much used. The other ones are trying to get theirs too, but it's been tougher. They've gotten more assets and volume than they have in options. But anyway, IBIT is really dominating that area. And the options are important for traders and institutional investors. So the numbers are on IBIT are similar, pretty similar to what you'd find on like a 10-year-old ETF. It's over $1 billion in options notional every day, which is a ton. I mean, it's ridiculous for a new ETF. So yeah, there's definitely a lot of, and then now there's ETFs that come out that are going to use options for you. So they'll give you IBIT or Bitcoin, and then they're going to write options on top of that to like maybe limit your downside or give you some yield by writing call options. They're going to do all kinds of slicing and dicing and experimentation and giving you your Bitcoin returns in different ways. And that's in the process of happening. There's been several filings. Right now, I think we've got maybe like a dozen filings that are just on Bitcoin and just offering these different ways to get your returns from it. And some of those will take off, but nothing will be like IBIT. IBIT is like on another level. It's the one.
Okay, Eric, and I know you have to jump off in a couple of minutes for another interview, but I just wanted to ask you. Obviously, it's kind of got forgotten about a little bit because of the success of the Bitcoin launches. Obviously, the Ethereum ETFs were approved and launched somewhere mid last year. How have they gone from your opinion? And if we obviously they're a lot smaller than the Bitcoin ETFs, but are they as large as you expected them to be, or has the performance been a bit lackluster? What's your views?
Well, they've taken off lately, and that's helped. They were really struggling the first couple months. Their performance was bad too. They finally caught a break. had a nice little run with performance, and now ETH is 3.8 billion. That's, again, for a new ETF, that's really good. It's not record breaking, and it's clearly, what is that, like 6% of what IBIT has, but I'll take it. I mean, I think you take it if you're Ether. It's decent. We always said that at the end of the day, Bitcoin is like gold and Ether would be like silver. Most people who buy gold ETFs don't also buy silver. They're fine having gold as their precious metal. There's also platinum and palladium, which are precious metals, and they have even less than silver. So I think over the years, this is going to be similar. Bitcoin will have 80 or 90% of all the market share. Ether will get like maybe 6%, and then Solana XRP will carve out their little percentage. But as the pie grows bigger, 6% of a massive 300 billion will be a lot of money. So I just would minimize expectations of Ether. The Ether people have let me, I don't really care. I'm just trying to get it right. But we warned people that this would not be the same kind of launch, and it wasn't.
Okay, excellent. Thanks, Eric. And just to wrap things up, how can people find out more about you and see a bit more about your work?
So you can, I have a podcast called Trillions, which you can listen to anywhere, about ETFs, really fun. And then on Twitter, at Eric Balchunas. That's a great way to find me. My DMs are open. Those are two free ways to find me. If you have a Bloomberg Terminal, 𝗕𝗏𝗏𝗏𝗏 go is the function where all our research is.
Okay, thank you very much, Eric. I got lots of questions for you, but we'll leave them for another episode somewhere in the future. So I thank you very much for your time, and hope to speak to you again soon.
Definitely. Thank you very much.
Thanks, Eric.